thank you so much, everyone, for joining us. We are here talking at Sales Boomerang University. The goal here, guys, is to become a retention rock star using Sales Boomerang, how we can use database intelligence to help get our clientele and our database in sync ultimately and create a living, breathing organism through Sales Boomerang. So today we'll be going over, hey, what is Sales Boomerang? 30,000-foot overview. How can I generally increase my borrower retention using it? And how can I use borrower intelligent alerts to just add a couple deals a month? Where can we find a couple insights that'll allow us to ultimately increase our pipeline and flow a little bit easier, as well as, hey, how do we benefit our referral partners on a pretty general overview? Next week, we'll get into a more detailed look in Sales Boomerang 201 as well as 301 the following week. So thank you so much for joining me again. I'm Spencer Schultz, training and adoption strategist with Sales Boomerang. I'm a former LO myself. My goal here is not to be the hero of this story, more so the guide. I want to share practices that real LOs are utilizing to do 100 million, 200 plus million in loan volume using tools like Sales Boomerang and Mortgage Coach, who have merged together. So what is Sales Boomerang? What is Mortgage Coach? How do these two entities help me, and what are the goals of them? So our number one goal here, guys, no borrower left behind. We want to make sure that anyone who wants to be a homeowner can be a homeowner. And our goal isn't just to make them a loan owner, but to help them be a homeowner in the end, to help them be debt-free, achieve financial freedom, accomplish their personal and financial goals. And we want to do that by helping to make sure everyone that we work with, everyone in our database, which we're going to define in a little bit, is in the right loan at the right time. So going further, what is a borrower intelligence system? What does that mean? It means that we're going to notify you with an insight every time someone in your database is ready to buy, sell, or refi. We're trying to move with 100% relevance, as opposed to the old-fashioned way of, hey, waiting for my referral partners to bring me business, hey, knocking down doors, or random check-ins, random anniversary and birthday cards. We want to be relevant. We want to have the ability to trim the fat from these conversations, eliminate spam, and get to the important stuff, and especially by developing meaningful relationships that last us throughout a borrower's borrowing lifetime. A couple fast facts here. The average number of mortgage transactions a borrower does in their lifetime is 11, right around 10.6, 11.7, where you'll see somewhere in there depending on where you find a study. But Sales Boomerang finds that to be right around 11. And number one with this number, we want to increase it. Why not 13, 14, 15 transactions by helping a borrower confidently strike every time the iron's hot and they have a possibility to accomplish a personal or financial goal? Number two, we want to help you as a lender to retain the remainder and develop that lifelong relationship so that we're working with mortgage advisors as opposed to, the data-driven rate jockey and getting away from the rocket mortgage of the industry, more towards looking at the big picture to help borrowers, again, accomplish those goals. We integrate directly with whatever CRM you use. We have an open-ended API. Currently, we're existing with Encompass as well as over 25 CRMs currently and always adding more. So we're currently working with a few of these integrations and continuing to increase that as well. So let's define your database. When we say database, before we get into it, you think of, all right, well, my past clients, but there's so much more value to be had in all of the conversations, all of the referrals, all of the prospects, everything. There's also even looking at, guys, who's not qualified, who was a turn down, or someone that we might have had a conversation with who didn't feel that they were financially ready, not yet qualified ultimately. Plus, hey, who's in our pipeline today? Are they shopping? Are they continuing on under our nose, essentially? And how can we help them and make sure that they're in the best place possible in a changing environment constantly within the market? So we need to be utilizing our database. Data is the new dollar, and we need to be making sure that we're not wasting dollars or cents here by leaving behind any of these factions of our database ultimately. So we take that database, and this is what, it's typically been throughout the history of lending. It's been, all right, I worked with this person back in 2018 and I check in here and there, and I come to find out they went somewhere else. I had no idea they were even interested. Or I worked with this person, got them into a really low rate in 2020. And, I try to check in with them. I don't really have much luck and try and, market what we have, but haven't really gotten a nibble back yet. And here's what Rocket and Zillow have. They'll have, they have the signal. All right, where do I look? My database. And that's what we all have. We all have these signals. But then we need to look at the insight. Okay, who's shopping? Who's credit qualified? Who's improved their credit score significantly? Who's had a life event happen that increases the chances of them executing a mortgage transaction, who has substantial equity. So Zillow and Rocket, if you're a homeowner listening to this and you've purchased or refied in the past a couple of years here, as soon as you have that credit pull, Rocket and Zillow, they're inundating you with phone calls, emails, text messages, going for volume. They've got Super Bowl commercials. Here's your rate. Here's the product we're offering. Here's the rate we're offering. And they're there for that one transaction. Where we can meet them and exceed them is by adding on the strategy that a borrower is able to examine for, again, not just that one transaction, but to accomplish those lifelong goals. What is their goal? Is it to help Johnny and Janie pay for college? Is it to put some money away for retirement? Is it to move closer to mom and dad and help them retire? Is it to start their own business? Whatever that is, we are able to look at the big picture, the long-term picture, in order to find that answer. 82% of your database leaves you every single year, according to Black Knight, one of the top AVMs in the country and one that we work with. So that means that about 4/5, 4 out of every 5 people that you've worked with that execute a mortgage transaction are gone. This is how we're going to see those opportunities and decrease that number by being proactive. And we have reactive or defensive mechanisms, and we're going to get into a couple of each examples today, and we'll get into more of them in the next 2 weeks. But 4 out of 5 are also going with the first lender they speak with. So those kind of line up there. 4/5 of your database leaves you, and 4 out of 5 are going with the first lender they speak with. So that means you have to be first. You have to be proactive. You can't just rely on your borrower to come back to you. Maybe they left you a great Facebook review in 2019, and then they forgot your number, and they searched into their computer rates, or they went into their bank and said, I need a loan. I'm having some troubles here. I need to consolidate some debt. And the other remainder here, you can see below that, is that about most of the other 1 in 5, about 18% there, are going to end up going with the second lender that they speak with. So if you're not first, you're losing 4 out of 5. And if you're not second, you're losing 19 out of 20 ultimately. So it is imperative to be first. And if you can't be first, you have to be second. This is a story of Alice, who is a real borrower, the lender that we work with. And we actually got the chance to interview her ultimately. And this one LO, he's like, he's been in the business for over 30 years. He's like, I've been doing this since the early 90s, since the 80s. I've been doing Sales Boomerang myself. You guys think you're so smart. Well, at the end of the day, we got to ask Alice ultimately when we interviewed her. And the biggest takeaway for me was, why did you stay with this LO, this LO Sam, this entire time? And she said, well, I got paired up with him through a realtor that was my parents' friend. He asked me a couple questions, told him about my goals, and ended up, getting my first home. And she said from that point forward, she would come to Sam, 20, 30% of this time for all these transactions. But she would be like, oh, we're getting married. We were looking to move up. And so Sam would know that, or something of the sort. But she said by the time any friend or family or anything she ever saw was, oh, rates are low. Oh, have you considered tapping into your equity? Or a friend told a story similar to doing so. Sam had already let her know the possibilities that she had. She was the one who got to tell her friends. So he was proactive. He came to her about 70, 80% of the time, she said. So it's imperative that we're coming there first. And hey, to have a lifelong relationship with someone, how many leads or prospects or referrals would you trade for one Alice, for one 30-year plus relationship with a borrower that's 10, 15 transactions? Prospects, I'd trade 1,000. I'd trade a ton for one Alice. And if you can concretely develop relationships with 30 to 50 borrowers, you're going to have a pipeline that's consistent with borrowers' goals, as opposed to being reactive to the market and competing with other lenders and interest rates and type of market that we're in and all those kinds of things. So it's really imperative to understand your borrower's long-term goals so that you can align and meet them. So here, guys, we have all of these alerts, and I think it's easy to separate them into 3 categories. We have our non-credit alerts, we have our core credit alerts, and then what we have called prescriptive scenarios, which we're going to get into core credit and prescriptive scenarios down the road. So the 2 things I want you to focus on here. Number 1, we have every alert or insight for every single loan and loan type, for purchase, for refinance, for HELOC activity, for move up, for anything at all, first time home buyer, whatever it is. risk and retention if you are monitoring a portfolio. But it's important not to typecast these alerts. All these alerts are doing, in essence, is giving you a relevant piece of information so that you can have a conversation with the borrower to find out their goals and help them meet them over the short and long term. Let's say hypothetically that you and I we go back 30 years, we're old buddies, we're old pals, we went to middle school together, and we like to catch up. Hypothetically, I know nothing about the mortgage industry, but I know that you're an LO. And we go catch up, we go get happy hour, once every couple months, grab some nachos, grab a beer. And I happen to say, oh, my friend John, he was telling me he has a really significant equity position, and he's got a couple lenders that have contacted him, and he's just really not sure what he should do. He's scared to mess it up. If you're an LO and I tell you that my friend John has equity and he doesn't know what he should do, what's your first instinct? Your most basic, simple instinct? Well, I'd love to talk to him and give him a call. Then what are you going to do? Ask him a couple questions, find out. And just because John has equity and that's what the conversation starts with, doesn't mean we can't talk to John about purchase activity. Doesn't mean we can't talk to John about debt consolidation or a HELOC or whatever it ultimately might be to help him accomplish his goals. So don't typecast these. And just because, someone's shopping for a home, doesn't mean you can't end up ultimately talking about a construction or renovation refinance or something of the sort to help them. So always be available to examine all aspects of what you can do as a lender for each alert. If you only talk about purchase activity, you only talk about refinance activity or accessing their line of credit, you're really doing them a disservice as well as yourself. And we'll get to that a little bit later. So with that, let's get into our tier 1 alerts. This is the meat and potatoes as we turn the chapter here today. And tier 1 is going to be non-credit alerts. These are our most inexpensive alerts, and these are a starting relevant point to help them find a financial solution if there is something that they need. These are going to cast a really wide net. Now let's start with our equity watch here. So we're not breaking any news here by telling you that the average American homeowner has equity. Equity's still up from this time last year, I believe about $40,000. It has come down a little bit in the last month or so, but ultimately we're not breaking that news. We're going to let you know, though, how much tappable equity that borrower has. Considering their current state, how much could they actually access? Obviously, can't always access all of it, and it's not a good idea to. Then, with that being said, we also have 3 of the top AVMs in the country, including Black Knight. We've created our own proprietary aggregate of those 3, and we like to say we want to under-promise and over-deliver when it comes to the appraisal. We don't want to tell you, Joe Smith's home here is worth $580,000. You work everything out. Joe's really excited. He's going to reduce monthly payments. He's going to access some cash, whatever it may be. And then the appraisal comes back and it's, 505 and you're disappointed. He's frustrated. That's the situation we want to avoid. So we want to underpromise and overdeliver. So with that, we're able to have that be the relevant touch point there. These are customizable in the sense that you can set the LTV of everyone in your database. You can use it like a Google search. Hey, Sales Boomerang, like a Hey Siri, say, hey, Sales Boomerang, show me everyone in my database that has at least $300,000 home values and at least 25% equity positions. In other words, their LTV is 75%. So you can treat this as a, hey, Sales Boomerang, show me this. It's a customizable setting for each of those, and that's able to be your relevant touch point. The next one here, guys, listing. This one is a little bit, so equity is a little more proactive. Listing is a little more reactive. And when and feel free to type along in the chat here, but when we receive a listing alert, which with Sales Boomerang, it includes every for sale by owner, every zip code in the country. And as long as it's posted on Al Gore's World Wide Web, it will be available within 24 to 48 hours. So if it's not on the internet yet, we won't have it for you. As soon as it is, we will. So with that being said, I get a listing alert here. You can see the hypothetical example of Joe Smith on the right-hand side of the page. He's at 113 East Hermosa Drive in Tempe. And let's say that Joe lists his home. Who's the first person you should call? You should call his realtor. You should look it up online, find out who listed it, give them a call. Maybe it's someone you've worked with in the past. Maybe it's not. And it will say, hey, congratulations, Mr. or Mrs. Realtor. I saw you listed Joe Smith's home for sale and just wanted to let you know, hey, I worked with Joe back in 2020, or I spoke to Joe back in 2019 and was going to give him a call, make sure that he's in the best pre-approval situation and understands his options. Oh, Spencer, thank you so much. I appreciate it. By the way, how did you know that Joe listed his home for sale? Did a friend tell you? And what do we hear back 95% of the time in that situation, that exact thing? Then and say, oh, well, actually, I have a system called Sales Boomerang. It lets me know anytime someone's on the move or going to buy, sell, or refi. Then what do we hear back? Almost 100% of the time again. How do I, as a realtor, get access to that? And it's simple. You have to work with a Sales Boomerang LO, such as yourself. So we can enhance our referral partner relationships through opening doors for them. Hey, this person's listing their home, or hey, this person has a really substantial equity position, or this person, could consider investment property, things of that nature. Well, we can't disclose any credit information or non-public information. We can disclose that they listed their home for sale, or that they, have a possibility and you would love for them to reach out and go over some options. So we're able to proactively say, hey, I would love for you to speak with this person and provide your expertise. And you can even set it up through your CRM that, let's say, your CRM generates a text message that goes to the borrower for an alert, like a listing alert. It also generates one for your realtor, and you don't even need to press any buttons. You can have Sales Boomerang set up through your CRM so that you upload data into it automatically every time you fund new loans. When someone in your database, in your monitored records with Sales Boomerang, lists their home, triggers back to your CRM, generates a text to that borrower, generates a text to your realtor. You don't even need to click a button. That is the automation that we are looking to achieve in order to align with what the best practices of top producers, guys like Jeremy Forcier, Shayla Gifford, Amit Singh, who we just did an interview with last week. And speaking of which, I wanted to share Mortgage Coach's YouTube. And I'm going to share this in the chat here. Mortgage Coach ultimately has 20,000 subscribers. We just hit the mark here, and we have all types of videos, guys. We have, again, actual top producers going over what their strategies are using Sales Boomerang, using Mortgage Coach. Hey, here's a fun one. 5 ideas to win with realtors when rates are over 6%. I'm going to drop that in the chat. And a really interesting one here from Sean Herrera with Cross Country Mortgage. And Sean basically gets into one, hey, quick little thing. He says, I pre-prepare my Mortgage Coach TCAs, which is something that we can get into later in these series. He says, hey, I prepare these, have my referral partners pass them out at open houses, and I have a QR code on them that a borrower can scan, and then I can see when they open it. So just simple, quick things like that, as well as more big picture philosophical ideas. Mortgage Coach's YouTube is amazing. We also have, hey, how is Amit Singh closing $75 million this year at Neo Home Loans? There's another one I'm going to drop in the chat for you guys. So please check out Mortgage Coach's YouTube. It is an outstanding resource. If you like podcasts, if you like webinars, things of that nature, I listen to Pardon My Take and Small Town Murder. When I'm done with those for the week, I'll kick on a couple of those if I wasn't a part of it. And I'll make sure that I'm able to sink in what top producers are doing and continue to sharpen my skills. All right. And let's get back to it. So that leads us to the next one. I want to make sure that this is sharing properly. Okay. So Rate Watch, the next one, guys, very simple. We are going to show when someone could benefit from lowering their rate and lowering their monthly payment. We actually integrate with Optimal Blue, so you can find their national averages, or you can change these as often as you like. It's a customizable setting for FHA, VA, jumbo, conventional, everything in between. So if we're offering 6,375 today, we don't want to see 6,475. So you also are able to enter a delta that would show you, for instance, 7 instead in this instance. And it's a very simple conversation of being able to leap forward that way. And there were a couple of things on listing. I think I skipped ahead of myself a little bit, but with listing, to jump around, my apologies. But with listing, we want to make sure. So we called that referral partner. We called that realtor, let them know, provided that value to them, let them know you were going to give Joe Smith a call. Then you're able to call the borrower and say, hey, I just spoke with your realtor, Dan Cross, and wanted to make sure you were getting the best options, go over a few potential things and ask you a couple questions. Let's make sure you're in the best scenario. So you've established trust with the realtor, you establish trust with the borrower. You can look at the seller side, then, hey, where's Joe Smith going? Is he going to, Scottsdale from Tempe? Do you know a realtor there that could help him out? look at the buyer side as well. You can try to double dip on those transactions and see where he's going and how you can help in that sense too. So listing alerts are fantastic. And again, you have access to FSBO. So you're able to point your referral partners where borrowers are maybe struggling in their own for sales and could use a little lift after a couple months. Rate watch we went over. So essentially, guys, to jump back in, not super relevant today. Rates are starting to come down a little, so you will see these opportunities, but you can see on the side here, hey, may benefit, and it will show you a target rate, what you're offering and what they're currently in, and you're able to work that way. It's an easy conversation to show those refinances as available. The next one here is reverse mortgage, and this has come a little bit jumbled up. That's all right. There we go. So if you're into HECMs, refinancing them, I believe only 50,000 new HECMs are generated per year, but there's a couple million that exist and you can refinance them using this scale as well. So looking to see, hey, who qualifies, who's coming up on it, retirement planning, and categorize that way using their home value, using their age, and the sliding scale between, and how much home equity they do have access to make sure that the minimum requirements are there. So again, just another service that you're able to offer your borrowers through Sales Boomerang. So with that, my friends, wanted to get into a little bit different conversation, and we're going to go through Mortgage Coach really quickly, who we are joined with, and they do several key things. And if you're not using Mortgage Coach, you need to be doing these same things. They're able to examine cost and savings over time, comparing multiple loan options in an easy to digest manner, sending personalized video content, and going over, your own personal brand and your own personal signature. If you're still using an itemized fee worksheet, it looks like, to a borrower, they stumbled into the back of Bob's Discount Furniture and they're trying to read through an inventory sheet, as opposed to, what looks like a TikTok almost, or an Instagram video where you're able to narrate it. You're able to see when someone opened it. This is like, Blockbuster versus Netflix, and Gen Z is about to become homeowners, guys. The young millennials are homeowners. How do they consume content? How do they desire to be educated? Through video, through visualizations, not through emails and fee worksheets ultimately. So the three major things that Mortgage Coach does that we firmly believe in and is the best option to help educate borrowers and develop that lifelong relationship: comparing multiple loan options, not just showing them one. Let's show them every possibility. Here's what it would look like to refinance. Here's what it would look like to, lower your terms, get into a 15-year and pay your home off a couple of years faster. Here's what it'd look like to tap into your equity and lower your rate a little bit. Then looking at cost over time after you do so. Hey, how does this help your short-term goal? Do you need to lower your monthly payment, or do you need to free up some cash? Then getting into their long-term goal. Is their long-term goal to own multiple properties? Is their long-term goal to retire faster? Is their long-term goal to pay their home off free and clear? Then how do we accomplish that with the next series of transactions? Here's an example of looking at a debt consolidation and the outstanding facets of using a Mortgage Coach TCA. We're able to examine, hey, here's three other options beside from what you're currently in. Here's what a 30-year cash out would look like. Here's what paying off $500 extra a month would look like. And here's what taking that $5,000 cash you can see here and putting it into a mutual fund would do for you over time. We're able to show them, hey, here's how much cheaper your monthly payment is. You can see it in a easy to digest graph on the side. Then you can point them to the payment line, how much lower it's going to be, how much a reduction in payment they're going to have. Hey, here's your monthly savings considering all of your costs and debts. Here's your freedom point. Okay, 18 years to pay off your mortgage if you're to take that cash out and reset the terms of 30 years, or is it better for you if you were to pay this off faster while lowering your monthly payments into 11 years? Then we can look at the savings over short-term, 5 years. And then, hey, how is this impacting your net worth as an investment strategy over the next 15 years? And for someone like a single mom, it's going to make a huge difference. Hey, here's an extra $138,000 you can put away for retirement here over the next 15 years. We're able to look at their debt specifically. Hey, let's look at the sum of your credit card debts. And hey, rates are over in the 6s right now, and I've got a 375. Okay, well, considering your credit card debts and the sum of all debts, you can easily display, hey, regardless, you're still going to lower your monthly payments on all of your debts by 13.45, then guess what? When rates come down, we can refinance you and get a little lower. So it's an easy way to really take the air out of the room and help a borrower make a confident decision quickly or prepare them to. We always need to be considering how we get in touch with these borrowers as quickly as possible. Speed to lead is the name of the game for some, but for others, it can be a slower burn. Guys, the best practice is video content. Emails, voicemails, they still work for us. We still get business that way. But if you're not sending personalized video content, you are not winning the way you could be. That is what top producing LOs. Go check out what Jeremy Forcier, Shayla Gifford, and Amit Singh are doing, and you'll be blown away if you're not. Some LOs that don't even have a CRM that they send videos or text through, they do this. It's a previous borrower they have a comfortable relationship with. They'll send this personalized video. They'll take their cell phone. They'll be genuine in that sense, and say, hey, Mr. and Mrs. Borrower, this is Spencer at SB Lender. We're doing an annual free mortgage health review. I actually saw that you had some really interesting possibilities considering what might happen in the market over the next 6 months that I really don't want you to miss out on. I've set aside some time for you tomorrow at noon. We always want to give a hard deadline. So I'm expecting to hear from you then. If there's a better time, shoot me a text. If not, I look forward to talking with you tomorrow at noon. Have a great day. 20 seconds there, guys. And hey, you want to specify that to, let's say, the equity alert. Hey, this is Spencer at SB Lender, Mr. and Mrs. Borrower. Hey, we worked together in 2020 and was looking through your file and wanted to say congratulations. You have an awesome equity position. I saw that you had a couple possibilities that I really think could help you accomplish goals, and I don't want you to miss out on. You could also lower monthly payments quite easily. So I've set aside time for you tomorrow at noon. Give me a call back. And if you, or give me a call tomorrow at noon, I've set aside time. And if that doesn't work for you, shoot me a text. Otherwise, I'll hear from you tomorrow. Have a great day. 30 seconds, guys, for those alerts. Quick video. You can even make one video that you send out for each type if you want and do it manually that way. You can have your CRM set up and use tools like BombBomb, which is awesome. Definitely check out BombBomb if you have not. But being able to shoot those videos, shoot a mortgage coach TCA that's narrated and you can highlight and you can do a presentation along with a borrower from an app. Those are the tools that are winning. The conversion rate from some of our lender partners on certain videos they send out, or what we call a conversation rate, pardon me, it's like 82%. A lender I was talking with the other day, 82% on a certain video gets a response from the borrower. Phone calls aren't getting that. Emails aren't getting that. Not even close, a hundredth of that. We also need to consider cadence. Okay, we're going to get into the mortgage inquiry next week, or let's talk about the listing alert. A listing alert, I want to try and contact that borrower pretty urgently. That's an action that they've taken, and I want to make sure that I'm the one who gets their pre-approval, or I'm the one that is able to be second to that conversation. But if it's an equity alert, do I need to contact that borrower, 11 points in 10 days? Definitely not. Definitely not. So these are automated for a credit alert more so, which we'll get into next week. That's the pace, but it's very different. You always need to consider cadence, and you don't want to spam a borrower or blow them up on an opportunity that isn't as reactive. Guys, we also want to set expectations properly with borrowers. Be proud of this technology. Let them know that you are a data-driven mortgage advisor, that you do care about them as a borrower over time and throughout their borrowing life, making sure that they're able to accomplish those goals. Let them in on the dirty little secret that you have this information up front. Set the expectation. Hey, it was a pleasure working with you. We actually have technology that helps us in our No Borrower Left Behind program. Anytime someone that works with insert lender's name, we are able to show them when they can benefit in the market ever after. We also have free fraud protection, which we'll get to next week. And hey, based on your situation today, I think you should be able to do X, Y, or Z next. I think you will be able to do a rate and term and lower your interest rate 12 months from now, 10 months from now, and then follow up, set that expectation. You'll hear from me a month before that happens. Save my number. It's going to be me, not some sort of, computer generated thing. So I look forward to working together again in the future and expect to hear from me. Set those expectations. That way a borrower knows, hey, I've got this guy in the industry or this gal in the industry that's going to help me in the future, that's going to take care of me. So they got a friend in the industry. They're expecting to hear from you and schedule the next best loan. And guess what? If your opinion changes or if the market does something unpredictable, call them with that relevant information. Hey, it's Spencer at SB Lender. I told you I thought in about 10 months you'd be able to do a rate and term when you close back in December. Well, guess what? This actually happened. And I think you would be able, you were mentioning starting your own business. Now would be a great time to, tap into your own equity if that was still appropriate or whatever ends up happening. So here's my 3 big takeaways, guys. This is for my new and developing LOs that are looking to establish a pipeline. If you're a top producer, you might roll your eyes at me, but guess what? You're doing these things too. Guys, if you don't call, you won't close the loan. If you don't text, you won't close the loan. If you don't send the video, you won't close the loan. If you don't follow up on the alert, how are you going to close the loan? We actually had a branch of a lender partner of ours that I did an in-person training with a few months ago. And I did an in-person training. They said, oh, we have a pond of alerts. And I said, what does a pond of alerts mean? And they said, oh, we have about 1,800 alerts that are kind of just sitting that, we're trying to get people to draw on. So you're telling me you have 1,800 possibilities when you're looking for loan volume this year. Everyone's like, oh, where do we find loans? You have 1,800 relevant pieces of information to have conversations with a borrower. You're not following up. It's the number one principle of being an LO, guys. You got to follow up. You got to put in the work. Number 2, again, if you don't ask a borrower, you won't know. And guess what? Neither will they. If we're having a conversation, someone's considering, consolidating debt, or let's say they're considering a move up. If you don't ask them, have they considered doing a buy down? If you don't ask them, have they considered, doing a construction renovation loan and what that would look like, as opposed to the offers that they're, not comfortable with currently. If you don't ask, you won't know. I had an LO that was down in Louisiana, was doing a follow-up training a couple months ago. And he told me he got a cash out alert on a borrower. We'll get to those in SBU 301. And he goes on to tell me, yeah, I saw that this borrower basically had a fair amount of debt. And I remember that previously she had told me, she wanted to retire soon, move closer to some family. She was a widow, was looking to be around more family. Her kids are all out of the house and all scattered. So she wanted to, in the near future, kind of try to retire towards the beach. So she actually came in to gift her son, I think, a down payment on his first home. Incredible present. I would take that every time. And so she came in, and the gentleman was like, yeah, I was actually looking over your file. And, he said she had a really significant equity position. She had like a 21 LTV, something like that. He was like, hey, I know you mentioned this specific area you wanted to move to. Have you ever considered maybe drawing on some of your equity to buy a home in that beach area? And I know you mentioned, retiring and wanting to supplement your retirement. After a year, you could actually use that as a rental home. You could rent it out through Airbnb or something like that. And then when you're ready to sell your other home, you can actually take the proceeds from your first home and buy a third home. And then you could continue a couple times and be able to, have some passive income coming in. He asked all of these questions. Have you considered this? Is this something you would be interested in? Some of my other favorite questions. If a borrower is a little bit cold, guys, can you tell me more about that? Could you elaborate a little further? Or, oh, hey, I realize this might not be a great time. Is there a better time I could give you a call when we could get a little deeper into it? It's a good time to allow you to pause, to pivot. Oh, if a borrower says, yeah, we've thought about it. Oh, well, could you elaborate a little bit more, or tell me more why? Tell me why. Those questions allow you. Always dig a little deeper, ask questions, be curious, try to be interested as opposed to interesting, and then think of solutions and present them. Finally, guys, we want to get closure out of every single alert. We want to make sure we've got our greens, our yellows, and our reds. Simply got my greens. All right. I called someone on an equity alert. They were like, oh my gosh, we've been thinking about putting on a new deck. We just weren't sure because of the rates, but this sounds great. Fantastic. You pull credit, you're moving forward. You're launching into the stratosphere quickly. It's a green, take notes, set up an appointment for the next meeting, whether it's an invite or whatever you need to do, follow up that way, take as detailed notes. That's a green. Set the urgency in your CRM to urgent. Then you got your yellows. Oh yeah, we actually did really want to put on a deck, but it's the holidays. We got, mom and pop in town. And, now's not a great time, but we would love to try and get it on before next summer. We really wanted a deck for next summer. Could you give me a call at this time or when X, Y, or Z happens? It's a yellow. Set the appointment, set a reminder for yourself, take those detailed notes, follow up 1 month prior to that date with the borrower, move that way. Then you've got your reds. I used to be a junior LO. I didn't have my license. I would get given lending tree leads, name, address, phone number. I would look it up on Zillow and I would give it a call. And I would get, pardon my French, but, given the middle finger through the phone quite a bit. And, wasn't a possibility, wasn't interested, or, hey, they already did something we couldn't find out about. It's all right. Close it out. put a red on it, non-urgent, take the note. I'll follow up next time I have relevant information or this time next year. So always trying to be having that closure out of every conversation. That's about it, guys. I don't have anything in the chat here. I'll give a couple seconds here if anyone has any questions or anything they want me to touch on in more detail, but I appreciate you so much for joining this week. My apologies. We got kicked off a little late. My dog is running through traffic in the rain. My hair is all wet. I'm doing my best. My apologies, guys. But with that, I appreciate you. Go help some people and go close some loans.